Hello, hi friends. Welcome to my channel Ritika Durgapal. Here I am with the part 2 on deduction allowed under chapter 6a. As in my previous video, I discussed with you all deduction based on investment under section 80C, 80CCC and 80CCD. Today we'll discuss the other deduction that are allowed under chapter 6a. First, we'll take a quick revision to the previous section that we had studied. First is ATC. ATC was an investment based deduction. I created a shortcut that is lump and try, which include all your investments. Maximum deduction allowed was rupees 1,50,000. 80CCC is contribution to a certain pension fund. Certain pension approved fund, that is deduction is allowed maximum 1,50,000. 80CCD 1 contribution to the notified pension scheme of government. It was a deduction based on individual if earning then 10% of salary, and if he is not earning, it is not employed, then 20% of GTI, that is gross total income. 80CCE says that all of the above combined together, maximum deduction allowed will be rupees 1,50,000. 80CCD1B, it is an addition to 80CCD1. If contribution made to a notified pension scheme, then maximum rupees 50,000 will be allowed as deduction addition to 80CCD1. 80CCD2 talks about to an employer's contribution made to a notified pension scheme, which is outside the limit of 80CCD1. 10% of salary deduction will be allowed for an employer contribution. Now let's begin with the other sections. First is deduction under section 80CCG. Deduction in respect of investment made under equity savings scheme. Who are the eligible assessee? A new retail investor been a resident individual with GTI up to rupees 12 lakh. The person assessee has started a new business and his gross total income during the year is not more than rupees 12 lakh. In what he should invest, then he can get a deduction under section 80CCG in listed equity share, listed units of equity oriented funds in accordance with a notified scheme. And how the deduction will be allowed? Deduction will be allowed as 50% of amount invested or rupees 25,000, whichever is lower. Means maximum he can invest rupees 50,000 because 50% of 50,000 will be 25,000 and maximum deduction he can get is rupees 25,000. So it is better side to invest rupees 50,000. For this investment, the minimum locking period will be 3 years from the date of acquisition, and fixed locking period would be 1 year from the end of the PY in which investment was made. This means you have to make an investment and you cannot violate the locking period. Section 80D, deduction in respect of medical insurance premiums. This is an health insurance premium that is assessee pay. These are for self, spouse, parents, dependent, children's. Let's see. Nature of payment and expenditure. Any premium paid otherwise than cash on health insurance means it should be in check. Contribution to a central government health scheme. Preventive health checkup. For self, spouse, dependent, children, in case of HUF for any member, maximum rupees 25,000. In case the above persons are senior citizen, then maximum rupees 50,000. In this, the premium should be paid by check and not by cash. Second, any premium paid otherwise than cash on health insurance or preventive health checkup for parents, maximum 25,000, and in case they are the senior citizen, maximum rupees 50,000 is allowed. Here also the premium should be paid by check and not by cash. Maximum rupees 5,000 is allowed for preventive health checkup by any mode including cash. Means preventive health checkup of rupees 5,000 is allowed as deduction if it is also paid by cash, subject to maximum rupees 25,000 or 50,000 as the case may be. Means the 5,000 is included in deduction 25,000 and 50,000. Third, amount paid on account of medical expenditure. If the person is not paying any mediclaim insurance premium, then he can get a deduction for the medical expenditure for self, spouse, parents including senior citizen, maximum rupees 50,000. Maximum deduction under section 80D is rupees 25,000 plus 50,000 as the case may be, and in case assessee and parents both are senior citizen, then he can get a maximum deduction under section 80D of rupees 50,000 plus 50,000 as the case may be. Now next, deduction under section 80DD. Deduction under section 80DD is allowed in respect of maintenance including medical treatment of a dependent disabled. This will discuss later what is dependent disabled, who are the eligible assessee. Eligible assessee who can claim deduction under section 80DD are resident individual or an HUF. They should incur an expense on the dependent disabled or for the medical treatment, nursing, training, rehabilitation of dependent been a person with disability, or he has paid or deposited under LIC or any other approved insurer or administrator or specified company UTI. Here the individual has incurred the expenses on dependent disabled for the medical treatment, nursing, training and rehabilitation. The quantum of deduction allowed under section 80DD are based on percentage basis. Person with disability less than 80% deduction will be rupees 75,000. This is a lump sum deduction. And person with severe disability that is more than 80%, then deduction will be 1,25,000. These deductions are not based on expenditure. The person should has incurred expenses. This deduction allowed is lump sum. Now, assessee and who are the dependent? For individual, it is spouse, children, parents, brother, sister of an individual who wholly or mainly dependent on such individual and not claim a deduction under section 80U. This is the main thing, that he should not have claimed deduction under section 80U. For HUF, he can be any member who is wholly dependent on HUF, and he should also not claim deduction under section 80U. Now next, deduction under section 80DDB, deduction in respect of medical treatment. Previously it was a medical expenditure for dependent disabled. Here it is for a specified diseases. Who are the eligible assessee? Assessee and dependent assessee. Dependent assessee are the same as we discussed under section 80DD, that is resident individual or HUF, same as previous section 80DD. Okay. Here is the quantum of deduction is allowed. If person is a senior citizen, then he can claim of rupees 1 lakh or amount actually paid, whichever is less deduction is allowed. For other individual, it is rupees 40,000 or amount actually paid, whichever is less. Here it is not a lump sum deduction. It is based on expenditure made by the assessee. Maximum 1 lakh and 40,000 is allowed as the case may be. Now next, deduction under section 80E. Deduction under section 80E is allowed in respect of loan taken for an higher education. Here the deduction is allowed if the person has taken a loan for an higher education. Who are the eligible assessee? Eligible assessee are individual who paid an interest on loan in the previous year out of his income chargeable to tax. Assessee should have paid the interest on loan out of his income chargeable to tax. What are the conditions? Loan must be taken for the purpose of pursuing higher education for himself or his relative. Loan must be taken from any financial institution or approved charitable trust. Then deduction, what will be the deduction allowed? Deduction will be allowed is for 8 consecutive years starting from the year in which the assessee start paying the interest. So here the assessee must have taken a loan for pursuing higher education and it must be taken from an approved financial institution or approved charitable trust. Then deduction will be allowed for 8 consecutive years. Next, deduction under section 80EE. Deduction for interest on loan borrowed for acquisition of self-occupied house property by an individual. Here the deduction is allowed for the loan borrowed for an acquisition of self-occupied property. 80EE provides additional deduction in respect of interest on loan taken by individual for acquisition of residential house property from any financial institution. It is an addition to rupees 2 lakh that is allowed under the head income from house property. For this, what are the conditions that you have to fulfill? The value of house should be less than or equal to rupees 50 lakh. Assessee should not own any residential house on the date of sanction of loan. Loan should be sanctioned during PY 16-17 and loan sanction is less than or equal to rupees 35 lakh. Means the value of house should be 50 lakh or less. Loan should be sanctioned during PY 16-17. He should not own any residential house and the loan sanction amount should be less than or equal to rupees 35 lakhs. Period of benefits. For how many years he can get the benefit under section 80EE? He can get the benefit, that is deduction is available till the repayment of loan. Deduction allowed is maximum deduction is rupees 50,000. This is an addition to rupees 2 lakh that deduction allowed under section 24 under the head income from house property. Thank you guys for watching. If you like my video, please like and subscribe the channel. Hit the bell icon for the update on next video. Do give your suggestion in the comment box. Thank you guys.